this really underscoring the depth of the downturn facing the global semiconductor industry, and yet the stock itself right now seems to not be taking such a big hit.
Yeah, I mean, these results are not a surprise at all. We were expecting this second straight quarter quarterly loss. Actually, it was quite large, as well as revenue was down, as you mentioned, 60% year over year in the calendar first quarter. This is following that big downturn that we saw in the calendar fourth quarter. This was not surprising. In fact, the numbers were a little bit better than expected. We can bring up the graphics there to show the exact numbers in won. Essentially, though, some of the guidance perhaps is lifting the stock. They're seeing that this current downturn perhaps is bottoming out, and that they're seeing DRAM demand perhaps pick up into the second half of the year. So yes, this is a boom-bust cycle industry, obviously. So they're seeing a bottoming out perhaps right now, turning into the second half as, you know, customers work off those excess inventories. Keep in mind, in the first quarter, we were hearing from memory chip makers around the world essentially saying that they were having 3 to 4 months of inventory that they needed to work off. And essentially, it was tough going to work off the inventories that those customers built up during the pandemic when there was so much demand and chip shortage. Obviously, the chip makers were building out capacity. Now they're slashing capacity, obviously, to work off those inventories. And exacerbating that has been the slump in demand for electronics globally, and in particular in China, of course, which is the largest smartphone market and PC market in the world. So, yeah, it's tough going right now. But again, perhaps why you're seeing some gains there in SK Hynix, up 1.87%. They see a bottom to this trough.